All right, my next guest is here to discuss what to expect and listen for from Jay Powell tomorrow. Kathy Bostjancic is chief U.S. financial economist at Oxford Economics. Kathy, it's great to have you here. You guys are expecting 4 hikes, right?
Yes, 4 rate hikes, liftoff starting in March. And we think we get confirmation that they will commence rate increases at the next meeting in March.
It's interesting because for the first time in a while, I'm getting just general sort of public interest in the Fed meeting, and people want to know if they're going to come out and say something that's going to really make the market sell off a whole lot worse. I guess that would imply if they came out and were really hawkish. What do you think the odds of that are?
Well, I think they've been rather hawkish, and you're right that the markets are sort of fearing even more hawkish tone from them. I don't think they'll ramp it up, that's for sure, certainly in light of what we've seen in the markets. Financial market conditions are tightening before the Fed has even, lifted 1 basis points on the policy rate, and before they've even stopped really doing QE, right? They're tapering it, but they haven't started to reduce the balance sheet. So I think they have to be cautious, but at the same time, the idea is inflation is running much hotter than they expected, and we've never, at least since the 80s, haven't seen a tightening cycle where inflation has been this fast and sticky, right? So they need to be firm.
And the unemployment rate is as low as it is before they really even get started, which is extraordinary. Dave Rosenberg thinks they might lean on the balance sheet to do a lot of the dirty work and the tightening. If they tomorrow were to be much more aggressive on the balance sheet side of things, while not so much on the rates front or in their forecast, what would the impact be on the market, do you think?
Well, I think, just a comment on the balance sheet, we are looking for about 1.4 trillion reduction in the next 18 months. So we're on the high end of that survey that Steve just outlined. That's only going to account for maybe 2 rate hikes. So they can lean on the balance sheet a bit, right? But it's not going to do all the tightening. So they really are going to have to lift the interest rates meaningfully. And I think 4 basis points and the reduction in the balance sheet. And that makes it tough for the equity market, no doubt.
Yeah, and we'll leave it on that note as we wait 24 hours to see what happens tomorrow. Kathy, thanks for joining us today.
Thank you, Kelly.
Kathy Bostjancic with Oxford Economics.